I have some spare time and we had some interesting price action this week so far. So I thought, why not make a quick video where I go over the potential trades I was looking at for BTC, the trades I took and the trades I missed because I got some front runs, which is just part of the game. Very quickly going over the high time frame, we have the range low, range high, step 1, step 2 right here, and then the deviation above. So this is step 1 at the highs, step 1 at the lows. Step 2, step 3, this was the deviation, broke back structure back to bearish, aka Wyckoff model 1. High probability outcome is to see rotation back to the low. Then from the high up, we have a bearish trend. So we have high, and then internally we have structure, but I'm looking at the main structure is low, lower high, lower low. So from the high up, this is the main bearish market structure to look at. Then we can see that price is currently located at that level. So that's an interesting level to keep an eye on. If you break this back to bullish, the rotation towards this high is very likely. Don't close above, but wick it, which price is doing so far, and you can get the rotation back to your low again. So pretty interesting level right here. Then you can also always look, if you are in range, for the volume profile, what is it telling you? And we can see that most of the volume is in the middle of the range, which is looking like a healthy range, with the value area high right here and the POC and the value area low right here. So since last week, price came down, but it held the value area low and the POC, pushed above, retested it, and right now is starting a local uptrend. So that's pretty interesting to see. And price is holding above the value area high for now. So yeah, in my opinion, super interesting chart. And as long as we hold above the value area high, a retest from the range high supply right here seems most likely. And then the key, or the reaction right here, will be key to see if we get a range high retest before continuing down to continue the overall range. Or if it gets flipped, it would mean a range breakout. So definitely super interesting price action. And then keep in mind that this is the low, lower high, lower low. So this is the main bearish market structure. Then if we zoom in from the low up, we also have structure to work with. Here we have the POC in the value area low, where price chopped around for a time and then eventually we are bouncing higher. So if we look at the lowest point and just skip the internal points, but look at the main bullish structure, we have high, higher low, higher high, higher low, higher high. So we have a main bearish structure with the high located right there. And then internally we have a bullish structure with this being the low and that being the high. Then since last week, this was the aggressive push up on Sunday. So now I'm gonna just go over the potential trades this week on BTC. Right here, we have an aggressive push up where you can see big imbalances. So that means that you also have demand, because demand gets created if you have super aggressive moves higher, because big players cause these moves. So just already marking this out, and then watching the local structure. Basically, local structure was from here, high, higher low, higher high, higher low, higher high. This is simple market structure, not that hard. And people in my group know about the swing failures, how powerful they can be. And that is where this came in, because if you are trending up, you can pull your range locally from high to low. And here you see, like, this is a pretty aggressive push higher. While if you compare this break with this break, you already see that this is stronger. This is also a body candle close above. Here you only have a wick, aka a swing failure pattern, SFP. So if you have an SFP of the high, that means that the low that brought you to that high is a weak targeted low. So likely for price to revisit that low, and then you can watch what is price doing. So at that moment, this is your range high, range low right there. With this being the step 1, So mark it out, tap 1 at the high, tap 1 at the low. Here, swing failure of your high, rotation to your low is most likely. So at this point, I was looking, oh, where is it? Right here. I was looking for a short trigger. And then I see that, yeah, like this was the last buy before the aggressive sell. So I had this marked out as my POI for a model 2. Because this is the target based on the swing failure of the range high. So what I wanted to see was high, higher low, higher high, tap this supply, and then I was interested in like short, if I had a short confirmation for rotation to this low. However, as you can see, price gave me a little nasty front run since we did not took out this high. Instead, we created equal highs. If this was like a little higher, then I would have had structure to work with. So short got front run, eventually price came back to the low, but instead of SFPing the low, it was a break. So this range was broken to the downside, which you can check with your deviation threshold here. Red line broke below it. If it stays within the red line, it can be a deviation, break below, and it's a break of your range and also a market structure break. So front run of the potential model 2 short right here. Unfortunate, but part of the game. Then from here, price is trending down. So you have technically high, low, lower high, lower low, lower high. So at this point, you can draw your range from low to high, and then this is your range. There, I posted also in the morning that I was interested in a sweep of the high right here to look for shorts. However, this was in the morning. I was at the gym and we had this sweep of the high. This was the deviation within your deviation threshold. So valid to look for short, but market makers did me dirty once again, because in this move, you don't have any structure. So not 2 candles going down to confirm a break of structure. So I could not take an entry. If this wick was literally like $5 higher, like this, then this was a higher high, then this was my market structure low, then this would have been my tap 2, but my deviation. If you have a tap 2 with market structure to work with, it's a valid short. So if that happened, this would have been a short, target, stop loss there, target, range low. For again, a nice 2.4R trade, which would have played out, but no structure, no trade for me. So also here, front run of the trade idea, which is all part of the game. That's also why I want to make this video, because I want to show that there are an enormous amount of trades you can take every day, but also that not every trade or every successful or good prediction, because I have a lot of good predictions, but not every prediction that plays out is also a trade. Then what happened afterwards is that we finally dipped into this demand, 30-minute demand, with 5-minute structure this time. So if we look from here, from the local last high with low, high, low, low, lower high, lower low, tapping into the demand. However, is this a break or yet again swing failure? This is an SFP because you do not break below your low, which means that the high that brought you into that low is a weak targeted level, which is then also your market structure high, because this is the high that brings you into that new low. While that happened, I also had a look at the order flow, which is like a nice addition, but not needed right here. And I saw a lot of aggression into this low. So a lot of shorts. Let's see if I can show it quickly. Like open interest nuked, so positions were closed, CVD went lower, spot went lower, and huge negative delta. So a lot of positions here got wiped out, but not, this is like aggressive move down. So a lot of positions closing, which can be forced sellers. So either longs forced to close because their stop loss gets hit, or panic sellers, aka a lot of bottom sellers. And then if you see a lot of bottom sellers into demand, price come up, retest the low, but fails to close below it, it shows absorption. Because if price was truly as negative as the market seems to be, then you would continue lower. Instead, you absorb here. So at that moment, I took the long after this wick higher. So my long was around here because we had the SFP, 5-minute bulls, stop loss below the SFP. And that was yesterday where we had Trump announcing that he would nuke the whole Iran and stuff. So a bit of uncertainty. So eventually I closed it around here for like a 3-hour trade because I was like, not sure what Trump is gonna do, and I was looking at it from a new potential range like this. So I thought, okay, we are reaching the premium side of this range. So I'm just taking my profits, happy with it. However, when I woke up this morning, I was like, that could have been like a 10-hour trade. So could have left the runner, but yeah, 3-hour, nothing to complain about. And then today, again, 2 nice trades in this potential range, which is we are trending up. So you pull your range from high to low. And there we have step 1 at the high, step 1 at the low. And we had single prints below. Single prints are like fair value gaps, but then on the TPO chart, below and above. So my expectation was to look for simply with a range, look for sweeps of the low for longs, sweeps of the high for shorts. Then I was looking right here. It was like close to late London, early New York, when I saw big orders coming in on the TPO chart. Here, like 89 million. So I was like, okay, what's happening there? And a lot of buying. It was like heavy buying. So normally I faded, but this time I was like, we have a lot of signals to take out this high. Let me first explain that why. If you look at the 30-minute candle, 30-minute candles always have to have wicks, and this one does not have a wick at all, and this one has a super tiny, so that's like unfinished candles, and that is always the market likes to take them out sooner or later. But if it's the daily high, then it's an even stronger because it's unfinished business. Market doesn't like unfinished business. Beside that, we also had daily warning signs. So I shared it in the statistical updates this morning. Here, daily stats are not leaning too strong to one side. It was early in the morning, but we have a warning sign at the daily high. And seeing the 30-minute candle high, it also looks like a bad high. So good chances we revisit that high. And here, this is from the private data stats. Warning, based on time statistics on the daily, 94% of the daily P1s have formed after the current P1. So pretty big warning sign. And combining that with the bad looking 30-minute candle high, shared here, I said good chances we revisit that high. By the way, in the Discord, I share all my updates and my views on my watch list on the crypto pairs and also on the oil chart, the gold, stuff like that, inside the DDT Discord. So definitely check that out. A lot of good content from other members as well. A lot of videos you can check about my system. I will upload them over time. Here you can see how trade ideas played out, which I did not take. For example, yesterday oil could have shorted the Model 1, did not take it. Here Tao, what the entry confirmations were for this Model 1 going into Model 2. Just examples. I think you will definitely like it if you are into trading. But yeah, definitely check it out for yourself. You can join either through using my Buy2Next link or paying a monthly fee. Now quickly going back to the chart. Let's see. So we had that 30-minute candles unfinished. We had a bad daily high. So a lot of reasons for price to travel to that high eventually. So I combined that with a reason for price to go to the daily high. Then I saw like massive buying in this candle right here. And I was like, okay, what could that be? And then I saw that like in this candle, like a lot of buying happened. And price pushed higher, came down, and had a super nice wick there. So then you always have to ask, okay, what did that wick do? Here you can see that you have demand, sell to buy, leaving imbalances behind. So this demand got mitigated right here with that wick down. So my theory behind it was the big buyers that stepped in here, defending their positions by mitigating this demand and pushing price higher. So at that moment, I was like, okay, I think this is a pretty clean inflation. And remember, this is like scalp trading. So this is different from high probability trades. But I entered here and I knew very good chances we will take out that daily high. The target was the daily high. Right here, I entered a bit higher because it was around 2.8, 2.7. And then it was like almost instant move to that range high. And I was laying in the sun when I got the alert that my TP was hit. And I was like, okay, in 30 minutes, New York Open starts. So let me finish my book in the sun. And then I want to see if we can get a short from here back to the lows. However, market punished me for that because price took out the high perfectly. And on the 1 minute formed a 1, 2, 3 local tree drive while breaking structure back to bearish right here. So if I was behind the screen, this was another clean short, just playing the range rotation, 2-tap models. Target, the range low. Boom, would have been another 2.5 bar trade. Super nice, and you can see price also took it out. Then with this move below the range, price tapped into the single prints that were resting there. So with this huge move up, price left gaps behind. The market doesn't like gaps, so it filled the gaps. And if you have gaps below or above, then if you want to see a bullish reaction, it is tap into it, fill them, and then move higher. So now that price filled those single prints, and even see like clean 3-minute demand at low here, got mitigated. Single prints have been filled. Price stayed within the deviation threshold. This is the red line here. So this is now a valid tap 2. And since we have only tap 1, tap 2 at the high, not a super clean distribution, I think this has the fuel to move back to the high for either a model 2, but I think it's more likely to go for a model 1 because we still have single prints resting above, plus strong supply, plus the weekly statistics are bullish. So I also shared that in the group right here with the reasoning behind it. Let's see. Yeah, like here, these were the single prints. They have now been filled. And I said, if this is tap 2, I expect tap 2 to hold for us to move back to new weekly highs. If price goes below the current tap 2, there is like locally no reason for price to go below the second tap. If we do that, I'm pretty sure we will go to the range POC around 69.2k. So in my opinion, pretty clean invalidation is step 2 if price is locally bullish. And I don't give signals. It's not that I say TP here, entry there, because it's your own responsibility. I don't want to have that responsibility. I want to share my ideas, my trades and stuff like that. I will explain it all, but I'm not here to tell you, take the trade here. I take all the responsibility. It will not help you and it will negatively influence me. But I will also make it often clear enough that I'm looking for trades. So I am currently in a long purely because I think, oh, I don't have it here. I have it here. So let's get rid of that. Entered here, stop loss is below that second tap purely because this is a pretty clean invalidation, as I just said. Go below this, and then I'm pretty sure we go to 69.2, the POC and the demand right here. So that's what I call inflection points. You either hold here or you go much lower. So then you have a clean invalidation before price can go higher. And my target is the single prints right there. During the live stream today, I mentioned how I was looking for that exactly this move, but since the move down was so aggressive, I said it wouldn't surprise me if it takes a lot of time, so that we get a push up right here, then maybe some slower price action, and then you can watch for the third tap. Tap 1, tap 2, potential tap 3 right there. Because if you look at the structure from here, it's pretty vertical. That's not really what you want to see in the local range. Oftentimes you get this and then eventually a slower move with structure to work with, and then you can get a better entry. But for now, this is my starter position because, as said, in my opinion, the tap 2 is super clean as an invalidation. So then I'm just willing to take the loss if we get there. Then if we follow the plan, get up, come back down, I might even add further to the position right here. So that are the trades on BTC, which are only this week. And during the live stream today, I also mentioned like a lot of people, they miss a trade and then they make themselves go crazy. Oh shit, I missed a trade, blah, blah, blah. Because they don't think in the abundance mindset. But in my opinion, it's very important to think that if you miss a trade or you take a loss today, then okay, so be it. It's just one of the other trades. There are so many trades only on BTC, like combine all these front runs and stuff. And if we only look at the winning trades, it's already close to 7-8R. While that one trade could have been a 10R already. The front run here would have been a 2.5R. The front run here would have been a 3R. The long was a 2.5R. The short here I missed was 2.5R to the low. Currently in this long could be a 3R again. So, and that's only from like the price action from Monday till right now. It's Wednesday. So just to show that there are opportunities everywhere. You just have to know where to look. And if you do that, you will see that there's an abundance of opportunities every day. And yeah, it's our goal to identify them and take advantage of them. And that is what we try to do in the Discord. I won't try to show it anymore, but just join it, see it for yourself. If it's not for you, then you can leave after a month. But yeah, I think it's definitely you get worth for your money. For now, I want to thank you for watching this video, and tomorrow I will be live streaming again. So also join the Discord server to get the links to the live streams every day after half an hour after New York open, and then we discuss what happened with the price action from the past day, what am I looking for the next few days, and yeah, just an amazing community to work with. So I hope to see you guys there, and cheers.